Okay, hopefully you can hear me well. We shall start now. Okay, hi everyone. I'm James, a market strategist at Tiger Brokers Singapore. Alongside me today is Marcus Ng, Vice President from
Hello,
SocGen.
Can you hear me?
Yes, perfect.
Eh,
Yes,
James, I can't hear you.
you can't hear me? Marcus, can you hear me? I think basically audience can hear me well because Anji, if he cannot hear me, he will say so. But I can hear you well. Okay. Yeah. I'll just Yeah. Okay, so the topic today is leverage US and Hong Kong stock opportunities with DLCs using technical analysis. So I will discuss the technical outlook of US and Hong Kong stocks and indices. So I will be roughly spend around 20 minutes on this. So today we also have Marcus Ng, Vice President from SocGen with us. So Marcus will then provide an in-depth presentation on DLC itself. Okay, so let's get started. So as usual, let me go through the disclaimer first. This presentation is provided to you for education and sharing purposes only, and it does not constitute to any form of advice. Past performance is not indicative of future performance. So let me talk about Hong Kong indices and Hong Kong stock DLC first. So basically, I think that the ongoing China stimulus measures will sustain the bull market. I believe this time is different. As we can see from the past 1 month, the Chinese government has been trying to keep the public excited with some stimulus news itself. So I reckon there will be more stimulus after the US presidential elections in order to prevent external shocks from US itself. China probably will first evaluate the economic impact of some potential trade tariff imposed on China, and then probably also roll out some targeted stimulus. So ultimately, I believe China's stock market will go up due to more fiscal stimulus. Having said that, I think for trades related to China itself, right, probably try not to hold short positions for too long. So let's talk about Hang Seng Index first. So we are seeing that it is forming a potential double bottom pattern with the net line at 22,700. So we can see that it previously tried to break above the net line earlier this month, but failed. Today, I believe the closing price is about 20475 or 78 itself. So the double top target price is 30600. So the double bottom. The double bottom is also quite similar to the pattern we saw in 2009. So back in 2009, there was a forced breakout of the net line first, followed by a pullback, and then eventually it break out the net line itself on the second attempt, and then it hit the double bottom target price. Okay, in 2024, we are also seeing a forced breakout initially. So now the Hang Seng Index is also experiencing a corrections. So having said that, we might see a real breakout of the net line on the second attempt, but we do not know when will it be. The double bottom target price again is 30,600, but I don't think that investors should get too excited just yet. We should wait and see if it really break out of the net line. Then probably we can establish some long position itself for the long term. So other than the double bottom, I also see an imperfect inverted head and shoulder pattern in the making. So this is the left shoulder, this is the head, and followed by the right shoulder itself. I would say that it's The Hang Seng Index is currently forming the right shoulder. The neckline again is around 23,500. Personally, it is still having a correction now, but I don't reckon that it could go back way down to 18,000. So previously, many people, many analysts, many investors, including me, thought that 18,000 would be a critical technical level itself. So basically, when it break above the critical technical level at 18,000, I would say the Hang Seng Index should be on the bull run itself. So the Hang Seng Index actually increased from about 18,000 to 19,000 on the day when they actually announced the stimulus plan, which is September 24th itself. In any case, I would say the Hang Seng Index would probably not go down to 18,000 again, as that would basically means that the stimulus is not helping at all. It's not helping the corporate earnings or the China economy. I reckon that if the Hang Seng Index were to go down again, I see that 19,000 to 20,000 range would provide some strong support. So the current level is about 20,400 plus. Okay, so the 19,000 to 20,000 range should be some good accumulation levels. And I also reckon that we shall see the Hang Seng Index goes all the way up to the previous high of 23,200 again. I reckon this level 23,241 will be tested again. Personally, I kind of think that the high over here will be broken. So if you are already holding a long position, you might also want to consider some of the resistance level here to take some profits. But if I were to guess, Hang Seng Index could be a range bound market, could be range trading to higher trend, to higher until November 5th. So November 5th will be the US presidential elections. After the US presidential elections, the Hang Seng Index may face some corrections, but I still expect it to continue to trend higher, probably until the end of the year itself. So this is my technical outlook of the Hang Seng Index. So here are some of the Hang Seng Index DLC issued by SocGen. So they are long or short DLC with leverage factors of either 5 times or 7 times. So the general rule of thumbs, at least for me, is that I would tend to look for DLC with the most sensitivity and highest trading value itself. So if you are interested in trading any one of them, simply type the DLC code provided here in the search bar of our Tiger app. You'll be able to find the specific DLC. For example, if you are interested to trade the this one, the negative 7 times DLC, you just need to type the DLC code here, which is ZYBW on our Tiger app search bar. Then you'll be able to find it and trade on it. Okay, let's look at the Hang Seng Tech Index itself. So if we were to look at the weekly candlestick, this is a bearish dark cloud candlestick pattern, followed by the hammer pattern itself. So I reckon bull or bears can be right. So for example, if you are bullish, you can probably set up a long position, but to cut loss when the price goes down below the low of the hammer pattern here. But if you are bearish, you could also set up a short position, but try to cut loss when the price goes above the high of the dark cloud candlestick here. But I would say that bulls have a higher chance of success because Hang Seng Tech Index has broken out of this wedge pattern. So just bear in mind that this wage pattern started from 2023 until September this year. So there are a lot of trading activities here, a lot of volume traded here, a lot of people being trapped here. So all the people, all the investors here finally have some clear direction now, which is a breakout of the wage pattern. So this would probably indicate an uptrend. And I would reckon that this uptrend would persist for a while. So another reason I am optimistic is because I think there might be an inverted head and shoulder pattern in the making. So again, left shoulder, head over here, and is forming the right shoulder now. So if you manage to catch Hang Seng Tech Index at a lower price, probably try to hold on for a longer term. The question here is that how much it will come down first before it eventually go up. So personally, I would look at another 8% downside from the current price of about 4563 to 4197 itself. Okay, in the worst case scenario, it should close the gap here and then resume the uptrend momentum. So if you are patient enough, you may try to wait until it closes the gap here itself, which is near to the 4197 price level. And if you remember, when the stimulus was announced on September 24th, the Hang Seng Tech Index was trading about 3,700 one day earlier. Again, I doubt that it could go back all the way to that price level at 3,700 because it would mean that the Chinese stimulus would mean nothing to the market itself. So I do not expect it would go down, it would travel down to that kind of low level at 3,700 itself. This would probably provide a strong support itself at 4197 if it really go down. So Hang Seng Tech Index DLC also have leverage factors of either 5 times or 7 times. Basically, they are long or short DLC. Okay, the next stock I want to bring to your attention is Meituan. So Meituan has reached the inverted head and shoulder target price at 217. So left shoulder hit right shoulder, and then it successfully hit the target price. So it's completely normal to see a corrections after it hit the inverted head and shoulder target price. Indeed, it came down as low as 167, and now it rebounded to 181 Hong Kong dollars. Okay. Again, Meituan could be forming an inverted head and shoulder pattern as well. So the net line is about 218 Hong Kong dollars, and the target price is pretty high. It could go all the way up to 370. However, I urge you not to focus too much on the inverted head and shoulder pattern just yet. Just keep in mind that some traders may want to push it past the net line first, the net line of this inverted head and shoulder pattern. So it might be better to look for a chance to set up a long position rather than a short position itself. So here are some of the support and resistance level for Meituan. So one trading strategy is to probably go long when it closes above the 182.7 Hong Kong dollar itself, and you should look at the next Fibonacci level as your target price, which is at 197.3. Okay, so the price now is 181. So hopefully it can close above 182.7 in near term itself. Okay, so there are 6 Meituan stock DLC issued by SocGen. So they are long or short DLC with leverage factors of 5 times or negative 5 times itself. Okay, now let's talk about Alibaba. So Alibaba is still trading within the downtrend channel itself. I would say that the better entry price is probably around here, around the $78, the middle line here. But I do not reckon that Alibaba will go all the way back to $78, given the ongoing stimulus by China government. So especially considering it is also trying to form an inverted head and shoulder patterns. So the left shoulder, the head, and the right shoulder here. And then it previously tried to break above the net line at around $110. It but eventually it failed. So it may try to break up the net line again. So if you have been listening to me a while ago, you should know that I don't like Alibaba in terms of fundamental analysis, but I think that this time is different because of the fiscal stimulus itself. I reckon we shall see Alibaba break above the high that we see here, or the high in 2023, or the high back in 2022 itself. So in any case, Alibaba recently just hit the support level at $96.35, and now it's about 97.8. So hopefully it can go all the way up to $106.2, hitting the 78.6% Fibonacci level. Okay, there are 6 Alibaba stock DLC issued by SocGen. Again, the DLC leverage factor is about 5 times. It's 5 times. Okay, now let's move on to US equity market. So I want to talk about S&P 500 first. So let me show you my target price for 2024 year end and 2025 based on the Fibonacci analysis. So I use multiple Fibonacci analysis to draw some conference zone here. So a conference zone just means that overlapping Fibonacci lines. So if a couple of Fibonacci lines are overlapping with each other, they will be the conference zone. In any case, this means that if the S&P 500 continues to go up based on Fibonacci analysis, I shall see meaningful resistance level between 5,900 and 5,950. So basically, I'm looking at 5,950 to end the year, to end 2024, which means that S&P 500 may still have another 86 points to go up from the current price of 5,864 level. So again, there may not be much upside this year. Another meaningful resistance is between 6,825 and 6,894. And this resistance level would be my target price for 2025. It means that S&P 500 may go up by another 1,000 points by the end of next year. Again, I believe this may sound insane to some of you, but hear me out. It only requires the S&P 500 to go up by another 18%, to reach the 6,850 level. And now it's only October, so S&P 500 has about 1 year and 2 months to reach there. So it's not really that difficult per se. So all in all, I'm constructive on US market in the mid and long term. My preferred strategy is to try to hold on to long position based on technical analysis. And what I did here is to draw a trend line linking all the tops, all the peak here. Okay, and then I clone this trend line and place it here and here as well. So creating an uptrend channel. So basically, we can see that it's still in an uptrend. So the idea here is that S&P 500 is now trading at 5864. So it peers above the upper trend line here. So maybe it's not the best time to go long. Technically speaking, the price should probably come down to trade within the uptrend channel. So if you are patient enough, you might want to wait until it come down all the way to the middle line here to go long. But judging from the recent price movement, it seemed quite difficult for the price to come down. And I reckon many bearish analysts, many bears out there have given up their bearish thesis in the past few weeks itself because the price just keep going up. So basically, I would say that it may not go down to this middle line here or even the line over here itself. So the uptrend channel does not provide you much trading opportunities as of now. So we probably go back to Fibonacci analysis to find some trade ideas. Here I drew a Fibonacci retracement from the April low to the July high, and I extend it by 127% and 141% and so on. So what this show you is that now it's hovering around the 127% of Fibonacci level of 5864. So basically, one trading strategy is to wait for a convincing close above the 5864 level before setting up a long DLC position. You would be looking at the next resistance level at 5966 for upside target for the resistance level itself. So again, let me repeat, you would like to wait until a convincing close above 5864, and then you probably should be looking at 5966 for the next target price itself. Okay, so here are some of the S&P 500 DLC. Again, they are long and short DLC with leverage factors of 5 times and 7 times. Okay, now we also want to look at some of the other indices or stocks. Okay, let's look at the Nasdaq 100. So basically, the uptrend is intact, is still trending within the uptrend channel itself. So if you are patient enough, again, you might want to wait until the price drop to this level before setting up a long position itself. So in the short term, I don't see a good trading opportunity here. The price currently is now trading between the Fibonacci line, meaning to say it's trading within this 100% and 78.6% level. So it can go either way. But again, you can see that it's forming a higher low and higher high itself. So we can probably conclude that it's still an uptrend itself. So one strategy is to probably wait until we hit 20690, and if the Nasdaq 100 can close above the this level, it could probably reach the next resistance at 21702. Sorry, 21702, yes. So but if it hit this level and subsequently come down, then you should be probably looking at this 19,895 to accumulate itself. Okay, there are 8 Nasdaq 100 DLC available for trading now by SocGen with leverage factors of either 5 times or 7 times. Okay, and again, we also know that SocGen recently also issues some US stock DLC, which are those Magnificent 7 stocks. But today I'm just trying to talk about NVIDIA and Tesla. Okay, let's talk about NVIDIA first. So again, Friday night, Bank of America just upgraded their target price for NVIDIA from $165 to $190 itself. So that would be their, I think, 1 year target price. So probably it's also good for us to stay optimistic on NVIDIA. Basically, it's forming a flat pattern. So I would say that once it break above this high, it should go up higher itself. I think if the price can close above the all-time high of $141, uh, up from, oh, sorry, the Friday closing is about $138. So for $138, should it close above $141, there could be a short squeeze itself. But I suspect the bears out there are probably not willing to give up yet. They may still want to push it down from the current price and create a double top pattern because these two tops are quite similar. But if you see a short squeeze, I think it can go as high as $150.91. And again, just remember that NVIDIA is going to release the earnings result on October 19. And in the meantime, before October 19, before the NVIDIA earnings result, there are also some earnings releases from some semiconductor stocks and other Magnificent Seven companies as well. So it's entirely possible for NVIDIA to go up even higher before NVIDIA owns earnings announcement. If other technology stocks provide some earnings surprises itself. In any case, one of the trading idea here is to take a short position, but to cut loss above the all-time high of $141. Just remember that you should turn bullish once it break above the all-time high. Okay, there are two NVIDIA stock DLC issued by ShortGen. One is a daily long NVIDIA DLC, and the other one is a daily short NVIDIA DLC itself. So the leverage factors is 3 times. Okay, let's talk about the final stocks, which is Tesla. Okay, Tesla is forming an inverted head and shoulder pattern now. So the net line is about $264. So you can see that previously the Tesla stock tried to break above the net line here at the end of September, but eventually failed. And it came down to Friday closing price of 220.7. But bear in mind that I prefer to see an inverted head and shoulder pattern forming at the bottom of the chart itself, but not in the middle of an uptrend. So I would like to see if the inverted head and shoulder forming here, but not in the middle of an uptrend here itself, because this would basically means an imperfect inverted head and shoulder patterns, which also suggests to us that it has a higher failure rate. But in any case, you would like to see Tesla stock closest above the net line of $264 before going long. Then the inverted head and shoulder pattern target price would be about $390 should it succeed. Okay, so this year we also see Tesla first came down to $138 before going all the way up to $220 now. I would say that it's still in a mid-term downtrend channel itself. As we can see from the line over here, the downtrend line here. It may go all the way to probably $170 to touch the downtrend line here first, especially since I expect the earnings report this Wednesday night may disappoint. I guess there is only so much Elon Musk can push up the share price with all the promises um, itself. So at the end of the day, I still reckon that Tesla is still a car maker, not so much of an AI company yet. I mean, the FSD is not entirely a success yet. Robotaxi is not a success yet. So I believe investor has priced in much of the AI optimism for Tesla for now. So probably we shall see some downside for Tesla now first. But again, Tesla is also forming a flat pattern. So once it break above the inverted head and shoulder pattern, which is again $264, it also would means that Tesla stock will break out of this flat pattern as well and continue to trend higher. However, at the moment, I reckon that Tesla is probably overpriced and may go down first before going all the way up, because I don't really see some exciting news towards the end of the year by Tesla. I mean, the robotaxi announcement is already announced. So if you draw a Fibonacci retracement from the all-time high of uh, over here to 2023 low of about $100, you can see that the share price of $220.7 is now trading near the 61.8% Fibonacci line of 221.26. So again, personally, I won't be surprised if Tesla goes down some more to probably hit the next Fibonacci level at $168. But again, history also tells us that never bet against Tesla stock. It always try to surprise us on the upside. So one strategy that you can have is to have a short position, but to cut loss if it close above the Fibonacci line of 221.26 itself. And should it yeah, I think that would be it. And then you can also look at some of the resistance level here and support level here to do some trading. Okay, there are two Tesla stock DLC. One is 3 times long and the other one is inverse 3 times daily short DLC itself. Okay, so thank you everyone. I will pass the time to Marcus. So Marcus, over to you. Thank you.
Okay, thank you very much, James. Hope you can hear me clearly. All right, let me share my slides. All right. Good evening, everyone. My name is Marcus. I'm from Society Generale. We are the issuer of this daily leverage certificates, or DLCs for short, that James has also highlighted in his presentation. So he has shared about the Hong Kong stocks and the US stocks. And I think for our DLC range, we do have quite a wide offering. We do have Singapore, Hong Kong indices, Singapore and Hong Kong single stocks. But for the focus of today's presentation, I really want to zoom in into something that we've just launched quite recently on the US stock DLCs. So this is a brand new, fresh out of the oven offering that we have on the DLCs, where investors can gain exposure now to US single stocks, the Magnificent 7 stocks, using our daily leverage certificates, or DLCs. All right, so in the next 15 minutes, allow me to just run through a bit about what these US stock DLCs are, how does it work, but a lot of the basic fundamental principles are also the same as all our DLCs. How the payoff works exactly is the same as our Hong Kong single stock DLCs or our Singapore single stock DLCs. So it's still very much, if you can understand how these US stock DLCs work, I'm pretty sure you'll be able to understand how the Hong Kong or the Singapore stock DLCs work as well. All right, so these DLCs are not something that we've had around for the last 7 years on the SGX. Society Generale, we first launched it on the SGX market in 2017, starting off with just the indices, DLCs on the MSCI Singapore Index as well as the Hang Seng Index. But over the years, we have been expanding into Hong Kong and Singapore single stocks, US indices as well 2 years ago, and then now we are expanding into US single stocks. So this is currently our range of offerings that we have on the DLCs. We have the Hong Kong indices, Hang Seng Index, Hang Seng Tech, Hang Seng China Enterprises Index, and your big China tech giants as well as some of your old economy stocks, Tencent, Ping An, Alibaba, all this we do have 5 times long and short DLCs on them. And the Singapore range, Singapore shelf range, we do have the MSCI Singapore Index, the FTSE Straits Times Index, as well as your main blue chip stocks, your DBS, UOB, Singapore banks, as well as your Keppel Corp, Sembcorp, and CapitaLand, etc. All right, and now the US shelf. 2020 last 2 years, we've been populating our US indices shelf with 5 times and 7 times long and short DLCs on the key US indices, the NASDAQ 100 index, the S&P 500 index, as well as the Dow Jones index, with 5 times leverage and 7 times leverage for both long and short directions. So this US indices shelf, if you have already traded it or you are quite familiar with it, then this would be quite applicable to also the US single stocks, where essentially you are using the DLCs that are listed on SGX, traded on SGX during Asian hours to gain exposure to the US underlyings. All right, so this US indices, they track the E-mini futures during Asian hours, during SGX market hours. So for the US single stock DLCs, there isn't any E-mini futures that's available during Asian hours, but there is something else that we are able to track, and that I will share with you guys in a bit. All right, so this is our US stock DLCs launch in October. All right, we have launched on the Magnificent 7 US stocks. So that's your Nvidia, Apple, Google, Meta, Microsoft, Amazon, and Tesla. We have 3 times long and short leverage, 3 times long and short DLCs on this Magnificent 7 stocks that we have listed just at the start of October. All right, so you can magnify your US stocks exposure with this US stock DLCs listed on the SGX. All right, so this is our US stock DLC shelf. All right, the Magnificent 7 stocks. We have 3 times long and short on the Tesla, Nvidia, Apple, Amazon, Meta, Microsoft, and Alphabet. All right, the middle column of the table is the name of the DLC. So in the name of the DLC, you can tell a lot about what the DLC tracks and how much leverage, etc. So you can see the name of the DLC always starts off with the underlying US stock, or the underlying stock that it tracks, or underlying index that it tracks. You start off with the name of the underlying asset, followed by the leverage factor, whether it's 3 times DLC, 5 times DLC, or 7 times DLC. That will be in the name, followed by whether this is a long DLC or a short DLC. And then SG stands for Society Generale. All right, we are the issuer of these DLCs, and then the expiry date in near your mom date format. So you can tell a lot about the DLC from the name itself. And on the most right column in this table over here is the stock code of the DLCs. So if you go into your Tiger Broker platform and you search for the stock code TSYW, you'll be able to retrieve the Tesla long DLC, and you can buy and sell your DLC on your Tiger Broker platform using just the stock code as a reference. All right. So the US stock DLCs, just a few benefits of how to trade the US stock DLCs is 3 times leverage. All right, so those of you who are very familiar with the TQQQ or the SQQQ in the US, the ProShares Ultra 3 times long and short on the NASDAQ ETF, all right, that leverage and inverse ETF for the DLCs is exactly the same kind of payoff as your TQQQ or SQQQ, all right? And over here, you have exactly the same kind of leverage, 3 times leverage exposure, all right? So that the difference is that those leverage and inverse ETFs that you have in the US, TQQQ, SQQQ is an ETF structure, all right? But for the DLCs, it's a certificate structure. So that also comes with some benefits. In a certificate structure, we can go beyond a higher leverage, whereas the ETF structure sometimes is capped at a certain leverage, maybe 2 times or 3 times. But for a certificate structure, we can go higher in terms of our leverage. That's why our Hong Kong and Singapore single stock DLCs and our US indices DLCs, they can go up to 5 times or 7 times leverage. For this US single stock DLC range that we just introduced, we will start off with just 3 times leverage for both long and short directions. All right. So you can trade both rising markets and falling markets. Such a tactical instrument would be useful in times of market volatility, where you can go both long and short directions, capture both the upside and downside opportunities in the market. You can capture new opportunities during Asian hours, all these US stock DLCs, along with the rest of our DLCs, are all listed and traded on the SGX securities market. So you can only trade it during SGX market hours, but this opens up a new trading window for you. Most of the time, especially during US earnings releases, whenever a US stock company, US companies, they release their earnings usually after the US market close in the wee hours of the morning. So maybe about 5 a.m. or 5:30 a.m. they will announce their results. All right. And then there's a post-market US market session. But if by the time you wake up after 8 a.m., then the first trading window you actually really get to gain exposure to the US stocks is using this US stock DLCs that is listed and traded on the SGX securities market. So we'll start at 9 a.m. SGX market open. We'll be offering bid offer codes, liquidity on our US stock DLC for you to initiate your position. So you can look at the US earnings results after US market close, and then based on the price reaction, you could initiate a position, whether it's a 3 times long or whether it's a 3 times short position using our US stock DLCs at 9 a.m. Singapore market opened. You can initiate your position there. All right, you can trade it on the SGX. So I mentioned that it's listed and traded on the SGX securities market. So you can enjoy the convenience of trading these US stock DLCs via any regular stock brokerage account, including Tiger Brokers platform, and you can trade it in Singapore dollar currency. All right, so you don't have to change your money into US dollar currency to gain exposure to these US stocks. You can just trade our US stock DLCs that are denominated in Singapore dollar currency. All right, I mentioned that the 3 times short DLC, you can use it to trade falling markets. So you can hedge your US stock portfolio against any price corrections. All right, so if you have a big bag of Tesla or Apple or Microsoft shares that you're going to hold for the long term, but you do see an impending US sort of price correction or impending short-term price correction on the US on this particular stocks, you could use the 3 times short Apple, Microsoft, or Tesla DLCs to hedge your exposure, your long-term portfolio using this short-term 3 times short DLCs. All right, and lastly, these DLCs are all priced around 4 to 5 Singapore dollars. All right, so they are priced around 4 to 5 Singapore dollars. And the minimum lot size units is 100 units, the same as DBS shares. Or when you buy DBS shares or you buy UOB shares, the minimum lot units is 100 units. So you can gain exposure to these US stocks with as little as 4 to 500 Singapore dollars. And you can use less capital to gain exposure to the underlying stock because of the 3 times leverage. And you are only charged your transactions cost based on this capital that you put in. So you are able to have cost efficiency as well as lower transaction costs when using the DLCs to gain exposure to the US stocks. All right. So this is some benefits of using our US stock DLCs to gain exposure or to trade the US underlying Magnificent 7 stocks. All right, so a bit back to the basics of DLCs. So for those of you who are interested in the Singapore stock DLCs or Hong Kong stock DLCs, this is similarly the same. All our daily leverage certificates or all our DLCs are fixed daily leverage instruments. They are short-term instruments that gives you that 2 times, 3 times, 5 times, or 7 times leverage exposure to the underlying assets daily percentage performance every day on a close-to-close basis. All right, and there's always a long DLC and a short DLC for you to trade both directions of the market. So if you are bullish on the underlying stock, you will buy the long DLC. But if you are bearish on the underlying stock, you will buy the short DLC. All right. So no matter what, you always initiate your position with a buy trade. If you're bullish, you buy the long DLC. But if you are bearish and you think the price will fall and you want to profit from it, you will buy the short DLC. All right. So these DLCs are all linked to an underlying asset, whether it's the underlying index or whether underlying single stock, and you'll track that with that 3 times, 5 times, or 7 times leverage performance on a daily basis. Okay. So these DLCs are traded on SGX like a stock. So I mentioned that you could buy and sell these DLCs on the SGX through a regular stock brokerage account, the same way that you will buy or sell your DBS or UOB shares. All right, and SocGen, we are the issuer of these DLCs, and we're also the designated market maker of these DLCs, where we'll be providing liquidity throughout the trading day throughout the SGX market trading day, 9 a.m. to 5 p.m., for investors to buy and sell the DLCs. All right, so we have over 200 DLCs listed on the SGX securities market, and not every single DLC will be traded every single day. So some days, Tencent DLCs might be very actively traded, but your Kuaishou DLC, for example, might not be traded that day at all. But it doesn't mean that there's no liquidity on the Kuaishou DLC. all right, you can still buy and sell the quite true DLC because SocGen, we will be providing liquidity in the bid and ask prices and the bid and ask volumes for investors to buy and sell the DLCs. All right, so that's one common misconception about the DLCs. If you don't see any traded value that day, it doesn't mean that there's no liquidity because SocGen will always, and we're obligated by the exchange to always provide liquidity in the bid and ask prices, bid and ask volumes for investors to buy and sell the DLCs during SGX market hours. Okay, so basics of DLCs again. How does the leverage performance of the DLCs work? It's quite a simple formula here. This is not just to set the record straight, the DLCs are not option type products. It is not a warrant, it is not an option. So there is no in the money, out of the money, at the money kind of concept. All right. This is not an option type product. It is more of a, in terms of payoff, is more or is almost the same or exactly the same as your leverage and inverse ETFs. All right, where every day you get that same fixed leverage performance on the underlying assets daily percentage performance. So over here, you can see that the formula is quite simple. The daily percentage performance of the underlying asset multiplied by the leverage factor will equal to the daily percentage performance of the DLC. So for example, if NVIDIA was up by 2% on today versus the previous day's close, so up from $100 to $102, up 2% on a US close-to-close basis, my 3 times long NVIDIA DLC will be up by 2% times by 3, 6%, while my 3 times short NVIDIA DLC will be down by 6%. All right, so every day on a US close-to-close basis, you will get 3 times the performance of NVIDIA's daily percentage performance. All right, so the conversely is also true if that, if NVIDIA was down by 2% today versus the previous day close, then my 3 times NVIDIA short DLC will be up by 6%, while my 3 times long NVIDIA DLC will be down by 6%. So this happens every day on a US market close-to-close basis, and that is the basic principle of all our DLCs, where it will track the underlying assets daily percentage performance on a close-to-close basis with that fixed leverage factor. All right. So for the US stock DLCs, for those of you who trade the US stock DLCs, you will understand different market sessions of the US stocks. So there is the regular US stock trading session that is like a 9:30 p.m. during daylight savings time, 9:30 p.m. Singapore time to 4 a.m. Singapore time. And then from 4 a.m. Singapore time to 8 a.m. Singapore time, there is the post-market trading session. And then from after 8 a.m. to 4 p.m., then there is the US market is closed for trading. All right, and that is where it overlaps, where the SGX market hours is when the US market is closed from 8 a.m. Singapore time to 4 p.m. Singapore time, the SGX market is opened from 9 a.m. to 5 p.m. Singapore time, and that's when the US stock DLCs are tradable. All right, so you cannot trade the US stock DLCs during the US stock market session, but you can only trade it during the SGX market hours, 9 a.m. to 5 p.m. All right, and then the last US stock session is the pre-market that starts at 4 p.m. Singapore time during US daylight savings time. So there's a bit of overlap there at the 4 p.m. mark between 4 to 5 p.m. where the SGX is opened and the US stock DLCs are tradable and the pre-market is open as well. All right, but the point of this slide is just to take note that the US stock DLCs can only be traded during SGX market hours, 9 a.m. to 5 p.m. You will not be able to manage your position or trade the US stock DLCs during the outside of the SGX market hours, basically. All right. So you have to be comfortable with that fact when you trade the US stock DLCs. You can't trade it outside of the SGX market hours, but the US stock DLC will still continue to maintain its exposure to the US underlying stock outside of the SGX market hours. That's what I'll be explaining in a bit. All right. So let us go zoom in into how does the leverage performance of the US stock DLCs work? I think there's 2 principles to this. All right, the first principle, I've actually highlighted that a bit already. How does the DLC track the underlying US stock performance? So principle number 1, the DLCs track the underlying US stocks daily percentage performance multiplied by the fixed leverage factor on the US market close-to-close basis. So in the example, same as what I've explained earlier on the NVIDIA example. All right, so on the US market close-to-close basis, my DLC will track the US stocks daily percentage performance with that fixed leverage factor. So in this diagram over here, you can see over here on the US market close T session, let's say assuming that the US stock closed at $100 and my 3 times long DLC closes at $1, all right, then in the US market close T plus 1 session, if the US underlying stock indeed rises to 115 US dollars. So it's up 15% from its previous close. Then my 3 times long DLC would multiply that by 3 times. So 15% times by 3, that's a 45% gain. And my DLC will close at around $1.45 before taking into account overnight costs and fees. That's where the close is for the DLC to give you that 3 times performance on the underlying US stocks daily percentage performance. All right, so at this US market close T+1 session, it's at 4 a.m. in the morning. You will not be able to trade the US stock DLC at this time of the day. All right, but this DLC will still have a close, will still track the underlying US stock performance and have a close of $1.45, but you can't trade the US stock DLC yet at 4 a.m. in the morning. You can only trade it when SGX market opens at 9 a.m. that morning. All right, so that brings us to principle number 2. How does the performance of the US DLC work during SGX market hours? All right, principle number 2, during SGX market hours, when the US market is closed, the market price of the US stock DLC will be closely linked to the performance of the US stock traded on alternative trading systems during Asian hours. All right, so in the last couple of years, we have seen increased activity or increased interest from investors looking to trade the US stocks during Asian hours. And there have been a rise of such alternative trading systems that do offer that Asian hour trading of US stocks. Even Tiger Brokers as well do now offer the 24/5 US hour, Asian hour trading of the US stocks. So these are all backed by these alternative trading systems. All right, so you can find the underlying US stocks reference price that SocGen will use as well on the Tiger Brokers trading platform during Asian hours. All right, so in this diagram over here, it's an elaboration of the previous diagram. So on the US market, close to close basis, you'll get that 3 times performance of the US stock DLC. But what happens during Asian hours? All right, so assuming again at the US market close T session, on the far most left of the chart over here, the US stock, we assume that it closes at 100 US dollars, and the 3 times long DLC closes at $1. All right. Let's say, for example, this US stock reported better than expected earnings results, after the US market closed. All right. And therefore, at the SGX market open 9 a.m. Singapore time, you can see that on these alternative trading systems, this US stock has actually risen from $100 in the morning, the close, to 9 a.m. Singapore time to $106, up 6% on the back of its positive or its better than expected earnings results. So at 9 a.m. Singapore time, when SGX market opens, SocGen will be quoting our 3 times long DLC at $1.18, a plus 18% gain from its previous close of $1 earlier that morning, to give that 3 times performance of the US stocks daily percentage performance. So the US stock DLC is up by 6%. So my 3 times long DLC should be up at 18%, and we'll be quoting at 9 a.m. Singapore market time, when SGX market open, we'll be quoting at around $1.18 to give investors that 18% gain. So at this point in time, investors, if you think that you are bullish, you think that this, US stock will continue to rise further and have that bullish momentum on the back of its better than expected earnings results, you can choose to enter your position now at SGX market open 9 a.m. at buy it at $1.18. And if indeed, by the time it gets to SGX market close around 5 p.m., just before 5 p.m. Singapore time, indeed the US stock price had risen further from $106 to $110 on this alternative trading system, so a plus 10% gain from its close earlier that morning of $100 US. Then my 3 times long DLC will be quoting at $1.30 to give you that 3 times performance again. US stock is up by 10%, so my 3 times long DLC will be up by 30%, and we'll be quoting at $1.30 to give that 30% gain. All right, so if at this point in time, just before SGX market close 5 p.m., you could then decide to lock in your profit and sell back the DLC at $1.30 to SocGen to lock in that profit of $1.30 versus your purchase price of $1.18 earlier that morning. You can choose to lock in your profit, sell it back to us, and lock in that profit at 5 just before SGX market close. Or you can choose to hold on to this US stock DLC overnight and continue to ride on the bullish momentum of the underlying US stock. But it's important to note that you cannot manage your position outside of the SGX market SGX market hours. So if indeed it becomes true that the US stock continue to rise, have that bullish momentum when it's US market regular hours, the US stock indeed continued to rise further from $110 to $115, a plus 15% gain from its previous close of $100. Then at the US market close T plus 1 session, all right, then my 3 times long DLC will have a closing value of around $1.45 before overnight costs and fees to reflect that 3 times performance of the US stock's 15% gain to have that 45% gain on the DLC. So at this point, US market closed T plus 1 session, at around 4 a.m. in the morning. The DLC would close at $1.45 to give you that 3 times performance of the US stock. But you cannot sell back this DLC now to SocGen at $1.45 at 4 a.m. in the morning. Unfortunately, you have to wait till the SGX market opens later that morning. So when SGX market opens later that morning at 9 a.m., if the underlying US stock is still trading at around $115 on these alternative trading systems, then SocGen will be quoting at $1.45 at SGX market open the next day at $1.45, and then you can decide then again to sell back the DLC back to SocGen at $1.45 to lock in your profit of $1.45 versus your purchase price of $1.18. All right, so that's how the US stock DLC's leverage performance works round the clock. All right, you will always track the underlying stock's performance with that 3 times performance on the US market close to close basis. All right, and during Asian hours, during SGS market hours where the DLCs are tradable, it will track the performance of the underlying US stocks that's traded on these alternative trading systems during Asian hours. All right, so important to note again, I want to stress again that you can only trade the US stock DLCs during SGX market hours, 9 a.m. to 5 p.m., and you cannot manage your position overnight during the US market's regular trading hours. All right, so I hope that gives a bit of a clarity on how the US stock DLCs, because I know it might not be very intuitive, SGX market hours only, that's when the US market is closed. So if I can only trade the US stock DLCs during SGX market hours, how does it work? When the US market is closed. So I hope that has provided a bit of clarity. I'm pretty sure there's also the question where, how do I find the underlying US stock reference price during Asian hours? During SGX market hours, I mentioned that you can view it on the Tiger Broker trading platform. You can also view this underlying reference price during Asian hours on our SocGen DLC website, which I will show you in a bit. All right, so this slide is a bit about the trading opportunities during Asian hours. Usually, I think the value proposition that that investors want to trade the US stock DLC, the key one would be during earnings results, because these companies usually report their earnings results after the US market close, and by the time you wake up, the post-market session will be over, and so the first immediate trading window that you get will be the SGX market trading hours, 9 a.m. That starts at 9 a.m. And then you can use the US stock DLCs to manage your position or initiate a position after the US earnings releases. And also, sometimes when these companies, they have their earnings releases, it usually results in quite big moves. So this table over here shows you in the latest earnings period, Tesla moved minus 12%, their one day percentage change after its earnings release. Amazon moved minus 8.8%, Nvidia moved minus 6.4%. And in the previous earnings period, the Tesla, the one day change, it gained 12%, and while Nvidia was gained 9%. So these are some big moves post the earnings release, and you might want to get in earlier ahead of this move by using the US stock DLCs at 9 a.m. Singapore time, initiating a position then before ahead of the US market open, so as to capture some of these big moves possibly. All right, so Tesla earnings is coming up, very soon on the 23rd. So I think it's in this week. Later this week, Tesla will be reporting its earnings. So do look out for how the Tesla share price will react to its earnings results. And if you see an opportunity there, you could use the Tesla 3 times long and short DLCs, TSYW, TSXW, to capture any opportunities in the market. All right. So before you go about trading the US stock DLC, there's one fundamental feature of the DLCs that's very important for everyone to understand, and that is the compounding effect feature of the DLCs. All right, the compounding effect can work for you or against you. All right, it can work for you well in a nice trending market, but the compounding effect will work against you in a volatile or sideways market. So that is a common feature that is apparent in all fixed leverage instruments, including your TQQQ or SQQQ. They all have this compounding effect feature that is important to understand before you trade the DLCs. Right, the table on the left shows you how the compounding effect can work for you very well in a nice trending market. So in the table on the left, you can see that the underlying asset is up by 3% for 3 consecutive days. And every day, my 3 times long DLC will give me that 3 times performance. So it's up 9% for 3 consecutive days as well. But cumulatively over the 3 trading days, my underlying is up by 9.27% over the 3 trading days. But my 3 times long DLC is up by 29.5%. So 9% times by 3 is 27%, right? But my 3 times long DLC has given me the extra 2% gain. And the extra 2% gain is due to the compounding effect. Every day your gains and losses are locked in. So your gains are compounded in this nice trending market to give you more than that 3 times performance if you manage to capture a nice uptrend or a nice trending market that gives you that compounded gains. All right, so that's where the compounding effect can work well for you in a nice trending market. But in a volatile or sideways market, like the table on the right over here, the underlying stock is up by 3% on day 1, but down 5% on day 2, and then rebounds back by 11.67% on day 3 to give a cumulative return of 9.27% over the 3 trading days. Similarly, my 3 times long DLC will give me that 3 times performance every day, every day on a close-to-close basis, but cumulatively, my 3 times long DLC is only up by 25%. So that 9% times by 3 is 27%, but my 3 times long DLC is only up by 25% and not 27%. That's because of the losses that are locked in on day 2, and then the rebound on day 3 is based off a lower base on day 2. All right, so that's where a volatile market or sideways market might not work so well for the DLCs. And that's also another reason why the DLCs are essentially short-term trading instrument and not buy and hold instruments. So you should look at it from a short-term perspective, whether you trade it intraday, for overnight, or a few days or a few weeks for these DLCs, but please do not hold on to the DLC for months at end or even a year. All right, this is not a buy and hold instrument. This is a short-term trading instrument, and I think that's the reason why also that's because one key reason is because of the compounding effect, right? In the long run, markets don't move in one direction only. They come back and they go up. Whatever goes up must come down. Whatever goes down must come up. So there's such thing as mean reversion in the long run. All right, so that's the reason why the DLCs are essentially short-term trading instruments. All right, that you can use as part of your portfolio of of trading. So maybe 5-10% of your portfolio can be allocated to such tactical instruments to capture opportunities in the market in the short term. All right, so these are some of the risks on the US stock DLC. I really want to highlight that this is a leverage instrument. All right, so whenever it comes to leverage instruments, it's a double-edged sword. So exercise your trading discipline, position sizing is important. Product performance may differ from 3 times the performance, so it's the compounding effect that I just highlighted to you guys. It's important to understand that before you trade the DLCs. And also the airbag mechanism can only be triggered during US trading hours. So all our DLCs have an airbag mechanism that's inbuilt into all our DLCs, where it reduces the investor's exposure whenever there's an adverse move against the direction of your DLC. And for the US stock DLCs, the airbag mechanism, the plus minus, can only be triggered during the US regular trading hours between 9:30 p.m. to 4 a.m. in the morning. That US regular trading hours, that's only when the airbag mechanism on the US stock DLCs can be triggered. And the trigger level for this airbag mechanism is plus minus 20%. So the US stock has to move intraday had to move plus minus 20% during the US regular trading hours intraday move before the airbag mechanism will be triggered on the US stock DLCs. All right. Okay, different regular trading hours, so difference in trading hours between the US stock DLCs and the underlying stock, I've already highlighted that. You have to be comfortable with the fact that you cannot manage your positions on the US stock DLCs during US market hours. You can only manage your positions during SGX trading hours. All right. So where can I find the US stock price during Asian hours? Let me just quickly share my screen on our US stock DLC page so I can show you where to find more information about the US stock DLCs, including the underlying reference price. So this is our website, dlc.socgen.com, dlc.socgn.com. You can find our US stock DLCs. A lot of information can be found on our US market tab over here. All right. So you can find the underlying US stock price, reference price during Asian hours and a few days of a look back period. You can find the full list of our US stock DLCs over here, as well as educational videos a recap of what I just shared with you, you can find it in this video over here. Our US economic calendar. So Tesla is reporting on the 23rd, Google on the 29th, Meta and Microsoft on the 30th, Apple and Amazon on the 31st of October. So lots of earnings coming up, and lots of opportunities for you to use the US stock DLCs to make a play on these earnings. All right, and also FAQs over here where you can find a recap of what I've mentioned as well as more information on the US stock DLCs. So please do check out our page over here under our website and this tab here, US market. All right, so if I click into any of the US stock DLCs, the terms page, you can find the underlying US stock reference price over here during Asian hours. All right, so you can find the reference price over here during Asian hours that which the DLC will track with that 3 times performance during Asian hours. All right, so make use of this information and also learn more about the US stock DLCs over here in our US market tab. All right, so do visit our website if you have any questions at all. I know I can't cover everything during this short 20 minutes of sharing, but please do visit our our website, and as well as if you have any questions, please give our DLC hotline a call, 6226-2828. My team and I will on standby during SGX market hours to answer any questions that you have on the US stock DLCs. So please just drop us a call, or you can drop us a mail. Any questions that you have, you can reach us in our contact us form over here as well. All right, so visit our US stock DLCs, US market tab over here to learn more about the US stock DLCs. And lastly, I think there is a Tiger promotion that's going on now. There's a paper trading competition that you could still join. But there's also the DLC promotion that you can make use of for you to get some rewards as you trade the US stock DLCs or our DLCs in general. So look out in your Tiger Broker app. Look out for that promotion on SocGen DLCs. All right. So thank you, everyone. I think we will have a bit of FAQ now.
Yeah, thank you. Thank you, Marcus. Thank you for the wonderful presentation itself. So let's move on to the Q&A session. So if you have any question, please type it in the Q&A box or type it in the comment section of the Tiger Live app as well. So also let me try to answer some of the questions that you have submitted when you register for the webinar itself. Okay, let's move on to the first question first. Okay, the first question is, how long more is the bull run? Okay, Marcus, probably let me take this one. Okay, so if you were talking about US stock market, I am quite bullish. I would say that AI bull run still got legs. So probably I would see that the AI bull run can last for another 3 to 5 years, as I see that AI is a long-term transformative trend itself. So my preferred strategy for the US equity market for the longer term is still long. I am again, if you remember from my earlier slides, I was looking at 6,800 as my 2025 year-end target price for S&P 500. But if you are talking about China market, I would say that it is now a policy-driven stock market at the moment. So it really depends on how much conviction you believe that China will continue to roll out the stimulus itself. And 6,800. Sorry, I think Marcus, did you on the? Yeah, okay, sorry. So I think probably this time is quite different for China. This is why you have been hearing China government trying to hold more and more meetings every other day to talk about some stimulus to really get the investors excited about the stock market or the property market or the China economy itself. So personally, I'm quite committed that China government will continue to roll out more stimulus. This is why I am constructive on China market. So it would not surprise me that Hang Seng Index could probably touch 25,000 by the middle of next year itself. Okay, so let's move on to the next question. So Marcus, probably you can take this one. The question submitted by the client is, how wide are the spread? Is it control?
Is it
Control. I think is it market make?
Okay, so yes, we are the market maker for all our DLCs, including our US stock DLCs. So for the US stock DLCs, if you look at our quotes in the market, you will find that it's very tight. So at a price of $6 or $5, which is where the price of the US stock DLCs are, generally $4 to $6, we are quoting at one tick spread. So one tick there is about 0.2% or 0.15% spread. So we are quoting very tight on this US stocks. I think it's I mean, it is the Magnificent Seven stocks, all right? The one of the world's most liquid or bigger stocks in the world, the Magnificent Seven stocks. So the liquidity is there for us, and we are able to quote very tight spreads, one tick spread on our US stock DLCs. So definitely, I think if you look at the market, if you look at our BNR's quotes in the market during HX market hours, you'll find that they are very, very competitive.
Okay, thank you, Marcus. So probably you can try to answer the next question as well. Is DLC product high risk?
Okay, so it is a leverage instrument, all right? So it is a leverage instrument, and for me, I would classify all leverage instruments as high risk. So yes, these DLCs are high risk because they are leverage instruments, all right? But of course, there is a range in terms of that high risk as well. The US stock DLCs is at 3 times leverage, all right? Whereas our Hong Kong Hang Seng Index or Hang Seng Tech Index DLCs that are at 7 times leverage, or our Hong Kong stock or Singapore stock DLCs that are 5 times leverage. So there's still a spectrum within that high risk element. All right, so this US stock DLCs, we're starting off with only 3 times leverage. And I think 3 times leverage is pretty common. Your TQQQ or your SQQQ are at 3 times leverage. There are also single stock leverage and inverse ETFs in the US that are like 2 times leverage. So these 3 times, I would say it's still a bit more of the conservative range within that high risk element spectrum. But as usual, when you're dealing with leverage, it's important always please exercise your position sizing carefully. Please exercise your trading discipline. Know when to cut loss. So do always take that in mind when you're trading leverage instruments as well as the DLCs. All right.
Yeah. So probably I also like to add on that as well. I reckon leverage can help you leverage your gains and also leverage your losses as well. So basically, every customer should ascertain some risk management, like cutting losses or position sizing. This kind of risk management should be in place when you engage with any leverage product like DLC for trading itself. Okay.
But I think just want to highlight one point. So just to end on a bit on that. So the thing about the DLCs versus other leverage instruments out there, for example, margin products. So the DLCs are not margin products. I mentioned that they're not options, they're not warrants, they are also not margin products. Which also means that your losses are kept at 100% of your investment capital. All right. You will never lose more than your invested amount. All right. I mean, 100% loss is still 100% loss. It'll be painful. But I think you can take a bit of comfort that, even if the underlying moves adversely against you, so you are on 3 times leverage, but the underlying moves 40% against you. So that's 120%, right? You're not expected to cover up that 20% losses. Your losses are always kept at the 100% mark, being that this is a securitized product, this is a listed instrument, your losses are always kept at 100%. Okay?
Yep, good point. Thank you. So let's move on to the next question. So let me answer the next questions. So I do see there are a couple of questions about the US outlook. So I would probably combine all of these questions together and try to answer them. So all in all, some of the questions related to US outlook would be, what do you expect the US market for the short term? What do you think of the US market after the US presidential election itself? So initially, at least for me, I expect the US stocks market to go down in the month of October because of the poor October seasonality itself. Because history basically tells us that US stocks go down in prices in October, especially during the US presidential election year. But a lot of analysts, including me, probably are wrong because US market is still trending up. I guess the main reason US stocks are still going up in October is because investors have been pricing in Trump sweep. So basically, it just means Republican sweep itself. So what does it mean? Basically, it means that Trump will gain control of the White House, while Republican will gain control of the House and Senate, just like what they did back in 2016 itself. So back in 2016, when there was a Trump sweep, Republican sweep, the S&P 500 went up by 5.4% from the US presidential election day until the end of the year itself. 5.4%. So all in all, if you also expect a Republican sweep, you should probably also expect the S&P 500 to go up in prices until the end of the year itself. So this is my US outlook for the rest of the year, especially in December. You will know that there will be a Santa Claus rally as well. So you probably would like to hold on to a bullish position rather than a short position itself. Okay, let's move on to the next questions. Okay, the next question is related to DLC. Okay, this is a interesting questions. So if the same DLC is providing the same leverage, should I choose the one with the price trading above $2 or the one trading at 20 cents? So probably let me try to give you some thoughts as well, because this is a good question. Because at least for me, let me share some personal opinion first before I pass the mic to Marcus. Just to give you my conclusion first, I would prefer to trade the stock DLC that is trading above $2, because again, for any DLC that is trading above $2, the minimum bid size is 1 cent. So the per bid movement is 1% for a DLC at $2. And so the DLC movement is probably easier to tally with the 5 times or 7 times DLC movement itself, because it's just a 1 cent movement. But if the DLC is between 20 cents and $2, I would say that the minimum bid size is 0.5 cents. So per bid movement is 2.5% for a DLC pricing at 20 cents. So I would say that DLC with price above $2 will move closer to the asset leverage factors than the DLC at the price of 20 cents. This is why I prefer the DLC with higher price, because it will be tally with the leverage factors itself. But I do realize that a lot of customers would prefer to trade DLC at a cheaper price. They would probably choose the one at 20 cents, because I guess the rationale here is that they can buy more units of that particular DLC due to the cheaper price itself. So all in all, I would say that you should always consider the sensitivity, the price, the trading volume, and the leverage factors when trading in the DLC itself. But this is just me lah. So probably let me ask Marcus the same question as well. So Marcus, a DLC that is trading at the price $2 versus a DLC that is trading at 20 cents, which one do you prefer?
Always choose the $2 one. Okay, no matter what, always choose the $2 one. I cannot stress this enough. So always take the higher price DLC, because that will give you more higher or more sensitive DLC. So what James highlighted is pretty much spot on. All right. So let's take an example here. I mean, the best is let's look at an example. I hope you can see my screen still on the Alibaba. We have 5 Alibaba long DLCs over here. And all 5 Alibaba long DLCs will give you the same 5 times performance on the underlying stock's daily percentage performance. All right. So if Alibaba is up by 2.69% today, all of them will be up around 14%. Same. All 5 DLCs will give you that same 14%, around 14% movement. All right. But they have different sensitivities because they are at different price. For example, DCUW is at 3 cents. 3 cents. All right. This DLC is at 3 cents. But my 905W, this one with the red star indicator, which is the most sensitive DLC, is at $1.36. and their sensitivity is different. All right. So for this Alibaba long DLC 905W, stock code 905W, it requires a 6 cents move on Alibaba for it to move one tick. So that's the sensitivity. Every 6 cents move on Alibaba, this DLC will move by one tick, and one tick here is 0.005 or half a cent. Whereas DCUW, it will take 59 cents move on Alibaba before this DLC can move by one tick. And one tick here is 0.001, 1/10 of a cent. All right. So this DCUW is a lot less sensitive than my 905W. It will take 59 cents on Alibaba before it can move by one tick, whereas my 905W requires a 6 cents move before it can move one tick on this 905W. All right, because 1/10 of a cent, 0.001 on the DCUW divided by 0.03, which is where the price of the DLC is a very big percentage. All right. 0.001 divided by 0.03 is a very big percentage as compared to half a cent, 0.005 divided by $1.36. All right, that's a much smaller percentage as opposed to the one tick percentage on DCUW. Therefore, for the same amount of move on Alibaba's share price, my 905W, my more sensitive long Alibaba DLC, can move more number of ticks for that same given move as compared to DCUW, which might only move one tick given that move on the Alibaba, or it might take even longer before it can move by one tick, while the 905W has moved already 5-6 ticks. All right. So essentially, while they all give you that same 5 times performance and the underlying stock's daily percentage performance, but my 905W, because of its higher sensitivity, it can give you a wider trading range. All right, so you within that move on Alibaba, you can choose to sell or buy the position within that trading range. Whereas DCUW, you have to wait quite patiently before it can even move one tick, because it requires a bigger move on Alibaba before it can move one tick over here. All right, so that's the sensitivity of the DLC. But of course, if you have any other questions about the DLC on sensitivity, it's not that intuitive a topic, please give us a call. We'll be happy to explain to you. But if you're ever in doubt as to which DLC to choose, there are quite a few here. Which Alibaba long DLC should I choose? If in doubt, always look out for the red star indicator. All right, the red star indicator will tell you which is the best DLC for your target exposure on this particular underlying and this particular direction. So in this case here, if you're looking to long Alibaba, the most sensitive DLC and the best DLC to express your view would be the red star indicator here, 905W. Okay.
Okay. Well said. Let's move on to the next questions. Let me try to answer the next questions. The question is how to identify bull or bear markets. What is the technical pattern? Okay. There are a lot of ways to identify the bull or bear markets. So probably the easiest way in terms of technical analysis is that you should always look at the high and the low. In the bull market, you should be expecting to see higher highs and higher lows when the price move higher. Whereas in the bear market, you should see the price move lower. The pattern is always lower highs and lower low itself. So other than that, I would also like to look at some of the classical reversal pattern like double top, a double bottom head and shoulder pattern, inverted head and shoulder pattern as well. So if you see a double top and head and shoulder pattern at the peak of the chart, it typically means that the bear market is happening soon and vice versa. Other than that, I will also look at some of the classical candlestick reversal pattern as well. Okay, so I hope I answered that. Okay, let's move on to the next questions. Again, it's related to DLC. Okay, Marcus, how long should I hold the DLC for? Is it only for day trading, and what is the usual trading period for DLC?
Yeah. So for the DLCs, it is really not a buy and hold instrument. All right, it's a short-term trading instrument. But you don't have to just trade it intraday. All right, you can hold it overnight. You can hold it for a few days or a few weeks. depending on your view of the market. All right, if you're confident that it's going to be a nice trading market over the next next few days or a week or 2 weeks, you can hold a DLC for that long. For intraday, a few days or a few weeks, but please do not hold the DLC for a few months or even a year. All right, so this is that I would say is not recommended. Do not hold the DLCs for a few months or a few years. That would be too long a period. And I think that's really that's where the compounding effect might not work so well for you in that time period, few months or a year. But in the short term, intraday, a few days or a few weeks, I think it's still manageable. If you have a strong view of the market. All right.
Okay, thank you, Marcus. I think that we have answered most of the question here. So probably we should call it a day. So thank you everyone for attending the DLC webinar today. So thank you, Marcus, and thank you
Thank
everyone.
you. Thank
And we
you.
shall see you soon. So do look out the DLC website page by SocGen, and do look out for the US DLC as well. Thank you.
Thank you. Thanks, James. Thanks, everyone.
Thank you. Bye.